Chapter 13, Secretarial Audit of CMADD. Secretarial Audit refers to mechanism which is connected with the audit of non-financial aspects of the company. It gives the necessary comfort to investors, management, regulators, other stakeholders as to the compliance of the all applicable laws by the company and certifies the existence of the adequate systems and processes for ensuring the compliance of the laws in the company. Who can conduct the secretarial audit? Only a member of the Institute of Company Secretaries of India holding certificate of practice can conduct the secretarial audit and furnish the secretarial audit report to the company. And secretarial audit legal provisions. Genesis of secretarial audit is traced from the companies before filing charges for the registration. It was being checked by the secretarial audit. So the same concept applied for overall all the company and all company related compliances. So secretarial audit came into existence. Applicability. Section 204(1) read with Rule 9. Applicability provides that every listed company, every public company, for public company, two criteria. First, having paid up share capital of 50 crores or more, and public company having turnover of 250 crore or more, and every company having outstanding loans or borrowings from banks or public financial institutions of 100 crore or more. Majorly outstanding loans and borrowings will be like exceeding 50 crores. So only in secretarial audit it is 100 crore or more. And next, 204 subsection 2, it is the duty of the company to give all the assistance and facilities to CS in practice, and the board of directors in their report shall explain in full any qualifications or observations or other remarks made by the company secretary in practice in his report. Next, applicability of section 204 to a company which is a subsidiary of a public company. Section 2 of 71 of the Companies Act defines a public company as not a private company and has a paid up share capital as may be prescribed. So subsidiary of a public company, even it is a private company, is deemed to be a public company. So if a subsidiary company of a private in nature of subsidiaries of public company, holding company is a public and subsidiary company is a private. So even if it is a private, it is deemed to be public company, and if it is a public company, the criteria will be paid up share capital of 50 crore or more and turnover of 250 crore or more. If it touches the subsidiary company which is a private, it is deemed to be public and it has to follow the section 204. Next, need of secretarial audit for effective governance and compliance risk management tool, effective mechanism to ensure legal and procedural requirements are met, helpful for the investor in terms of the compliance level of the company, ensures timely compliances, strengthen the image and goodwill of the company. Some key reasons why secretarial audit is important. Essential. Some key reasons why secretarial audit is essential. First, compliance verification. Second, corporate governance. Risk mitigation. Stakeholder confidence, preventing fraud and mismanagement, legal requirements, improving efficiency and effectiveness. Secretarial audit as a tool for good corporate governance, ensuring the regulatory compliance, monitoring the corporate practices, assessing board effectiveness, enhancing the transparency and disclosure, identifying risk and the controls. Next, objectives of the secretarial audit. The objectives of secretarial audit encompasses various aspects of ensuring legal compliance, promoting good corporate governance and enjoying transparency. Here are some key objectives of the secretarial audit. First, verification of the compliance, assessment of good practices, identification of legal and regulatory risk, evaluation of the board procedure, review of statutory register and records, examination of disclosures and reporting, and assessment of related party transaction, detection of fraud and mismanagement, recommendation of remedial measures, enhancement of the stakeholder confidence. So, first, verification of the compliance, assessment of governance practices, identification of legal and regulatory risk, evaluation of board procedure, review of statutory register and records, examination of disclosures and reporting, assessment of RPT, detection of fraud and mismanagement, recommendation of remedial measures, enhancement of stakeholder confidence. Test yourself. Is secretarial audit applicable on a private limited companies which is subsidiary of public company having turnover of more than 250 crore or more? Means private company having turnover of 250 crore or more. Yes, that private company has to conduct the secretarial audit. Next, secretarial audit is to be made compulsory for all the listed entities under SEBI LODR regulations, and secretarial audit to be extended to all material unlisted Indian subsidiaries in line with the recommendations of the committee. So, what is Regulation 24A? Every listed company entity and its material unlisted subsidiaries incorporated in India shall undertake secretarial audit and shall annex with its annual report a secretarial audit report given by the company secretary in practice in such form as may be prescribed with effect from 2019 March 31st. So, what is material subsidiary means? Means a subsidiary whose income or net worth exceeds 10% of the consolidated income or net worth of the listed entity and its subsidiaries in the immediately preceding accounting year. Every listed entity shall submit a secretarial compliance report in such form as may be specified to stock exchange within 60 days from the end of financial year. And one more, annual secretarial compliance report is applicable to all listed entities. Is it compulsory for a listed entity to annex secretarial audit report to annual report? Yes, as section 204 requires a secretarial audit report with the board report, but regulation 24A of SEBI LODR regulation 2015 provides that requirement of annexing it with the annual return. So, think of section 204 is of Companies Act. So, company whatever decision takes depends on the board. So, Companies Act asking to attach with the board report, but SEBI asking to attach with the annual report because SEBI more focused into annual reports, disclosures and all. So, annual report, SEBI asks for annex with the annual report, but Companies Act section 204 says to annex with the board report. And exemption, regulation 15. Listed entity having paid up share capital of not exceeding 10 crore and means its paid up share capital should not be exceeding 10 crore, means less than 10 crore is allowed, 9.5 crore allowed, and net worth not exceeding rupees 25 crore means 24 crore, 24 and half crore is allowed on the last day of previous financial year. Means if they don't want to come into the section 204 category, so the paid up equity capital should not exceed 10 crore and net worth should not exceed 25 crore in the last previous financial year. And once if the section 204 regulation becomes applicable to a listed entity, it shall ensure compliance with the same within 6 months from such date, from the day it got attracted to section 204. Within 6 months from such date it should comply with the section 204. Next, provided that once the above regulations become applicable to a listed entity, they shall continue to be remain applicable till such time the equity share capital or net worth entity reduces and remains below the specified threshold for 3 consecutive financial years. Next, auditing standards on secretarial audit, CSAS 4. The application of this standard is not mandatory for annual secretarial compliance report issued in terms of SEBI circular on 8 Feb 2019. Secretarial audit entrusted on a voluntary basis by auditee to an auditor. However, adherence to secretarial standard is recommended. How adhered to other standards has to be ensured while complying with the CSS 4. An auditor, while accepting the SEC audit, shall also comply with the principles laid down in CSS 1 to CSS 3. Next, what is periodicity of SEC audit? Proactive SEC audit on a continuous basis would help the company in initiating corrective measures and strengthening its compliance mechanism and processes. It is therefore advisable that the SEC audit is carried out periodically, either quarterly, half-yearly or annually, and adverse finding, if any, is reported on interim basis to the board immediately. The SEC audit report to be annexed with a board's report is required to be submitted before preparation of the board report. Next, few risks of the non-compliance with laws and regulations. First, failure of the legal compliance, failure to obtain proper approvals or permissions or licenses. First, legal compliance failure. Next, failure to obtain the proper approvals or permissions or licenses, and regulatory actions, non-compliance of environmental laws, failure to keep accurate records, failure to monitor the company's reporting requirements, PCS as extended arm. Next, advantages. Secretarial audit facilitates monitoring compliances with the requirements of law through a formal compliance management program which can produce following positive results to the stakeholders of the company. First, better compliance of laws leading to the reduction in number of frauds and consequent prosecutions, protecting the interest of the stakeholders, protecting the company or its directors from consequences of unintended non-compliance of the laws, independent assurance and comfort to independent or non-executive or nominee directors that the affairs of the company have been conducted as per the law, instilling professional discipline and self-regulation, reducing workload of regulators due to better and timely compliance, enhancing the quality of services to investors. Any qualification in the report will be immediately alert to the investors. So, audit evidence to promoters. Secretarial auditor assures promoters, those in charge of the management are conducting the affairs of the company in accordance with the requirements of laws, and the owner's stake is not being exposed to unintended risk. Next, for non-executive or independent directors, so SEC audit provides comfort to these non-executive or independent directors that appropriate mechanisms and processes are in place to ensure the compliance, and thus any risk that mitigating risk from a regulatory or governance perspective. Next, government authorities or regulators, it also facilitates reducing the burden of regulators in ensuring compliance, and they can take timely actions. Investors, SEC audit helps the investors in taking informed investment decision as it evaluates the company in terms of compliance and governance norms. Other stakeholders, it is an effective due diligence exercise for the prospective investors or joint venture partners. Next, risk of secretarial auditor. First, section 204, punishment for the contravention. If a company or officer of the company or CS in practice contravenes the provisions of 204, then every such person will be liable to a penalty of 2 lakh. In case of a practicing company secretary fail to comply with the provisions of section 143, then if it is a listed company 5 lakh and any other company 1 lakh. Next, section 447, punishment for the fraud, and next section 448, punishment for false statement. If auditor, that is, he made any written report, certificate, financial prospectus, other documents required, any person who makes a statement which is false in any material particulars knowing it to be false, and or which omits any material fact knowing it to be material, shall be liable under section 447. So 447 is punishment for the fraud. So 447 is, any person who is found to be guilty of the fraud shall be punishable with the imprisonment for a term which shall not be less than 6 months. So minimum is 6 months, but which may extend to 10 years, 6 to 10 years. 6 months to 10 years, and shall also be liable to a fine which shall not be less than amount involved in the fraud, but which may extend to 3 times in the amount involved in the fraud, provided that where the fraud in question involves public interest, then the term of the imprisonment shall be not less than 3 years. So minimum 3 years will be. Next, as per section 451, punishment is provided for repeated default. If a company or officer commits an offence punishable either with fine or imprisonment, and where the same offence is committed for the second or subsequent occasions within a period of 3 years, then the company and every officer for the second or subsequent in the period of 3 years, then that company and every officer thereof who is in default shall be punishable with twice the amount of fine for such offence in addition to any imprisonment. Next, professional misconduct as per CS Act. Here they gave only second schedule related actions, but they should give first schedule and second schedule both. Here they gave only action taken by the disciplinary committee, but there is one more authority, that is Board of Discipline, that also will take the action. And section 21C means SID, same powers as of civil court. For more clarity, go to the chapter 4 quick revision video. Code of conduct. Code of conduct is a necessary component of any profession to maintain standards for the individuals within that profession to adhere. It brings about accountability, responsibility and trust to the individuals that profession serves. A professional need to consistently live up to its values so that the clients, stakeholders, regulators, fellow professionals and public at large can have the full trust in the profession. The fundamental principles which should govern the code of professional with others have been broadly identified as to encompass integrity, independence, competence, objectivity. Integrity, independence, competence, objectivity, ethical behavior, conformance to prescribed technical standards for us CSAs, confidentiality of information acquired in the course of professional work. And the Council of the Institute accepted the recommendations of Code of Conduct Committee, which inter alia prescribed rules applicable to all the members, rules applicable to members in service or practice. Scope of secretarial audit. This is important. First, Companies Act. Next, SCRA, Securities Contract Regulation Act, Depositories Act, FEMA, regulations and guidelines under SEBI Act and enlisted in the Form MR3. MR3 means Secretarial Auditor Report. Secretarial Standard issued by ICSI. CSA is 1 to 4. Listing agreement entered into by the company with stock exchanges, if any listing agreement is governed by SEBI LODR. And in SEBI, some of they have listed that also we can use. First, SAST, next prohibition of insider trading, ICDR, SBEB, issue and listing of debt securities, register to an issue and share transfer agent, delisting of equity shares, buyback of securities, LODR and other laws as applicable. Other areas which need to be checked is secretarial auditor needs to examine and report on the compliance with the applicable clauses, that is secretarial standards and listing agreement entered. Secretarial audit report also required for reporting on whether the board of the directors of the company is duly constituted and with human director is there or no, with the balance of ED, NED, ID and human director. The changes in the composition of board of director that took place during the period under review were carried out in compliance with the provisions of the act. Adequate notice is given to all directors to schedule the board meetings agenda, and detailed agenda is with at least 7 days prior given or not. Majority decisions are carried through while dissenting members' views are captured and recorded as a part of the minutes. There are adequate systems and process in the company commensurate with the size and operations of the company to monitor and ensure compliance with all the applicable laws including general rules. Next, secretarial audit process. This is summary of chapter 9 to 13. First, appointment of secretarial audit as per rule 8 and as per section 204. If secretarial auditor is applicable, we should appoint, means company should appoint. Before in board meeting, board of directors was appointing. Now shareholder in general meeting, shareholder will take decision regarding appointment of secretarial audit. This is amendment. Communication to earlier incumbent means communication to previous auditor. Next, acceptance of the appointment. Auditor has to accept the appointment. Offer for the appointment can be given by both auditor and auditee, but acceptance has to be made by the auditor only. Next, preliminary discussions or service. Before going to the appointment, preliminary discussion. It is important to have a relevant info about the company. The SEC audit is expected to take general overview of the company and interact with personnel, means employees involved, to know about the nature of the business. Next, preliminary meeting. The preliminary meeting with the senior management. This is normal company. Preliminary discussion means normal, even outsider also if they visit the company they can know, but preliminary meeting is bit more serious. Preliminary meeting with the senior management and administrative staff involved in the audit will give a fair idea of what is expected and the manner in which audit activities are to be undertaken. At this stage, a time frame of the SEC audit should be determined and finalized. Next, finalization of the audit plan and briefing the staff. Important work out. It is important to work out an audit plan. The plan involves briefing the audit staff as to allotment of the work, and the review of the controls help the auditor determine the areas of the highest risk and design test to be performed in the field section. Next, the SEC audit should be prepared and the audit staff should be properly sensitized before commencement of the audit. Means audit team should be careful about the company confidential information. Testing, interviews and analysis. The SEC auditor should determine whether the company controls identified during the preliminary review are operating properly, means internal controls is operating or no, and in the manner described as company described, actually that in that way they are operating or no. Field work typically consists of interviewing with the staff of the company, whether formally or informally. This exercise may result in significant finding which the SEC auditor may bear in the mind while preparing the secretarial audit report. Working papers are a vital tool of the audit process. They form the basis for expression of the data opinion. They connect the management's record and info to auditor's opinion. They are comprehensive and serve many purposes for company as well as auditor. Audit summary of discussions. It is recommended that the findings during the course of audit are summarized and presented for initial discussions with the management for their reviews. Submission of SEC audit report. In a Form MR3, the auditor shall prepare and submit in MR3. The report is addressed to the members, but it is to be submitted to board. The board shall contain the opinion and shall state whether his opinion on the company is carrying or not due diligence of the applicable provisions of the various laws. The report should be provided with or without qualification. Auditing standard. SEC audit should be conducted in accordance with the auditing standards, that is CSS 1, 2, 3, 4 by the ICSA. Identification and segregation of applicable laws. Secretarial audit to ensure compliance of specific laws and general laws. First, identify the specific laws. Next, applicable laws and principles for making such segregation. First, the following factors auditor should verify the correctness of segregation of the laws. Registration with various authorities such as SEZ, sectoral regulators, segments such as manufacturing or trading, status of the company listed or unlisted, geographical location, registered office, units, divisions, branch offices like that, plants, branches. However, for identification of laws applicable on company, in addition to above following factors shall also be considered. Key financial parameters, type or classes of the company such as private, public, holding, subsidiary, foreign nidhi, producers, section 8, agreements governing rights, obligations of shareholders such as joint venture agreement, shareholders agreement, number, class, category of employees, workers such as human, contractual employees, etc. It is important to note that certain laws which may fall in the category of general laws may also become specific law for practical industries. The Form MR3 as notified by the MC under 204 of Companies Act has provided that the SEC auditor shall report on the status of compliance of other laws as may be applicable specifically. Test yourself. What is the format for SEC audit report? Form MR3, to whom the SEC audit report is addressed to. The SEC audit report, the SEC auditor is appointed by the shareholders of the company in general meeting. However, SEC auditor report is addressed to the members of the company. Okay. This here they gave board of directors. Now change it to shareholders in the general meeting. Verification of a corporate conduct and compliance of laws. Identification of events or corporate action which require the audit. Events or corporate actions. Next, identification of events or corporate events. Corporate events are financial statements. The auditor is expected to identify the corporate actions from which a compliance requirement may arise. Corporate actions may primarily be identified from the following: financial statements, agenda and notes and agenda of board meeting, committee meeting and members meeting, minutes of the board or committee or members, reporting and filing to regulators, annual reports, statutory disclosure, third party sources. Verification of the compliance. The auditor should verify the compliances of the applicable laws, rules based on the information gathered by the auditor. Next, board composition. As required by the Companies Act, whether the composition has been prescribed or not, has maintained or not, and role of auditor in verification of the board composition. Auditor has to verify that minimum and maximum number of directors on the board correctly as according to the provisions is maintained or not. He has to check. And optimum combination of the board include proportion of NED and ED and ID and human and nominee director. That also is or no. In that first point is resident director at least 182 days, and if new company proportionately, and every listed should have 1/3 numbers as a director, and ID and CG may prescribe the minimum number of IDs in case of public company. Next, at least one human director, and every human director should have in every listed company, but if other than listed company, public company, then 100 and 300 should check. And regulation 17 of SEBI, optimum combination of NED and ED, and for 1000 top 1000 companies, 1 independent women director and chairperson provision. If NED, 1/3. If not NED, half. And even if NED but related to promoter, then half should be ID. And for top 1000, before it was top 1000, now it is top 2000 companies should have not less than 6 directors, and if there is any SR equity shares, then half of the board should be ID. And next, board processes. Various provision mandating board processes: meeting of board and committees, meeting of committees that exercise powers, meeting of members, board performance, evaluation and training, appointment and resignation of the members, role of auditor in verification of board process. They can be broadly divided into 2 parts, namely Part A, board structure, and Part B, board system and procedure. System and process broadly refer to the framework of legal and procedural compliances of the auditee, including but not limited to internal regulations, control, guidance and governance. Meaning of the system and process: a system is a core element that a company management has or implements in its business. It's something that helps the business run. The processes are all the things that company management do in order to make any given system work most efficiently. In other words, systems are designed to connect all of an organization parts and interrelated steps to work together for the achievement of the business strategy. The auditor shall assess the efficacy, means efficiency and adequacy of the system and processes of the auditee, commensurate with its size and operations, for verifying compliance of applicable laws, rules, regulations, standards, guidelines and defined internal process, if any, by reviewing the records maintained by the auditee, understanding the compliance responsibility centers, assessing compliance mechanism and understanding its extent, coverage, severity, mapping, analyzing instances of show cause notice received. Next, detection of the fraud. Auditor shall exercise professional judgment and maintain professional skepticism, means professional judgment, throughout the planning and performance of the audit to detect and report the fraud envisaged under the provisions of section 143. Transaction which may involve the fraud: related party transactions, excessive managerial remuneration, insider trading and intercompany transaction, merger or demerger, acquisition, IPO frauds. Next, reporting of the fraud. It is a duty of an auditor to report fraud to CG if the amount involved in the fraud is more than or equal to 1 crore against the company by its officers or employees or auditor has been fraud done. And duty of the report to report audit committee. In case fraud involving lesser than 1 crore, the auditor shall report the matter to audit committee or board immediately, but not later than 2 days of his knowledge of fraud, and he shall report the matter specifying nature, approximate amount involved and parties. Disclosure in a board report. The following details of each of the fraud reported to audit committee or board during the year to be disclosed in the board report. Nature of fraud, approximate amount involved, parties involved, remedial action taken, consequences on failure in reporting of the fraud. If CS in practice does not comply, he shall be punishable with the fine of 5 lakh in case of listed, and in other company it is 1 lakh. And further section provides that no duty to which auditor of a company is subject, it shall be regarded or having contravened by reason of his reporting, if it is done in a good faith. Means he has to have done it in a good faith, then punishment may be waive off. Who is considered as an auditor for fraud reporting? Stat audit, CS in practice, cost audit. However, internal auditor or such other professional appointed under statute rendering other services is not comes under this. So, CA, CS, CMA will come and internal auditor will not come in the definition of auditor. That means for 1 lakh and 5 lakh penalty, they will not come. Difficulties in estimating the quantum of the fraud. By and large, the auditor, including SEC auditor, goes by the estimates or reasonable range provided by the management for purpose of estimating the quantum of fraud, amounting and reporting. Depending upon the complexity and duration of the fraud, at times it could be difficult for the auditing personnel to determine the quantum of fraud and loss suffered. In the event of after some time it is discovered personnel to determine the quantum of that quantum of fraud has exceeded the threshold limit of 1 crore, then subsequent reporting may be required and the secretarial auditor may have to report to CG and within 45 days of determination of the revised fraud estimate or loss which crossed one, means before it was not crossed, or before he was not sure will it crosses 1 crore or not. After calculating, it got crossed 1 crore limit. So from there he got to know that fraud has crossed 1 crore. Within 45 days he has to inform to CG. In view of the above, the estimation of the amount of fraud is very critical, and if estimation goes wrong even after taking reasonable care, then it will impact the decision whether to report to the concerned authorities or otherwise. Very interesting question at this juncture, that not required. Next, procedure for reporting of the fraud. Reporting of a fraud by auditor involving amount more than 1 crore. So, if amount is more than 1 crore. If an auditor of a company in the course of performance of his duties at start has as a start auditor has reason to believe that the offense of fraud which involves or is expected to involve individually an amount of rupees 1 crore or above is being or has been committed against company by the officers, employees, or and the auditor shall report the matter to CG. Auditor should report such fraud as soon as but not later than 60 days of his knowledge about the fraud, means from the day he got within 60 days. Next, report to board and audit committee. Step 1. Auditor shall forward his report to board or audit committee as the case may be within 2 days of his the knowledge, seeking their reply, and within 45 days they have to reply. Within 45 days. Next, report to CG after reply of board. After board or audit committee replied, on receipt of such reply or observation, the auditor shall forward his report and the reply or observation of the board or audit committee along with his comments, means his comments and board comments both, to the CG within 15 days of such reply or observation. Report to CG if no reply received. In case the auditor fails to get any reply or observation from the board or audit committee within the stipulated period, that is 45 days, he shall forward the report to CG along with the note containing that details of his report that earlier forwarded to board or audit committee but he not got any reply from them. That also he should include. From the last day of 45th day, from then he has to wait till 45 days. At the end of the 45 days, he can forward to CG. Reporting of fraud by auditor involving amount less than 1 crore. In case of fraud involving less than 1 crore, the auditor shall report the matter of fraud to audit committee or board within 2 days of knowledge. In both the cases, within 2 days, he has to inform. In such case, the board shall disclose nature of fraud, amount involved, parties involved, and remedial action taken in its board report. Name of the party should be disclosed only when the board or audit committee has not taken any remedial action. If they taken the remedial action. Fraud versus non-compliance. The term fraud can be defined as an act or course or deception, an intentional concealment, omission or perversion of truth to gain unlawful or unfair advantage, induce another to part with some valuable item or surrender a legal right, inflict injury in some manner. Willful fraud is a criminal offence which calls for severe penalties and its prosecution and punishment. However, incompetence or negligence in managing a business or even a reckless waste of firm's asset does not normally constitute a fraud. Non-compliance. The term non-compliance refers to failure to comply with the laws, rules, regulation. The term non-compliance is commonly used in regard to failure to meet the compliance requirements or failure to doing compliances. Identification and reporting of events, actions having major bearing on auditee's affairs. Auditor shall assess and identify the material action or event having bearing on the auditee's affairs in pursuance of the applicable laws, rules, regulations. So, such parameters may include: first, consideration involved in the transaction, whether or not in the ordinary course, transaction representing a significant shift, omission of an event or information is likely to result significant market reaction. For the following are the indicative actions or events may be considered to have bearing on the auditee's affairs: future plan of merger or amalgamation, revision in ratings, fraud, default agreement, corporate debt restructuring. Further, the SEBI LODR regulations including following events which are considered as having bearing affairs of the company, means these transactions or events will have the effect on the company direct. So, if get affects, it's the shareholders, connected people, consumers, creditors, debtors, all will get affect. Default in timely payment of interest, preference, dividend, any attachment or prohibitory orders restraining the company from transferring non-convertible securities, any action which shall result in the redemption, conversion, cancellation, retirement in whole or part of the non-convertible securities. So 2 entries related to non-convertible, even first also non-convertible. Any action that shall affect adversely payment of interest on non-convertible, any change in the form of nature, any of its non-convertible debt securities, any changes in the general character or nature of the business, disruption of operation due to natural calamity, any event such as strike, lockdown, lockout, details of any letter or comments made by debenture trustee, delay or default in payment of interest or dividend, failure to create charge on asset within the stipulated time, any instances of default, delay in timely repayment of interest, any major changes in composition of board of directors, any revision in ratings, means credit rating, it was A and now B, like that. The following approvals by board of director in their meeting, the decision to pass any interest payment, short particulars of increase of capital, whether by issue of bonus issue or through capitalization, all the information, report, notices, call, letters, circulars, proceedings, etc. Impact of audit report. The secretarial audit helps the investors in taking informed investment decision. The secretarial audit report should be prepared in accordance with auditing standards issued by the Institute ICSI and be signed by the SEC auditor who has been engaged by the company to conduct the SEC audit, and in case of a firm, by company secretaries by the partner under whose supervision the SEC audit was conducted. An effective mechanism to make sure the compliance with legal and procedural requirements provides a level of confidence. Secretarial auditor ensures legal and procedural requirements strengthen the goodwill of a company. Secretarial audit is an effective governance and compliance risk management tool. It helps the investor in analyzing the compliance level of a company's. Done. Chapter 13. Thank you so much.